Okay, it's June 9th, and it's about 30 minutes before the market closes. Just do a quick update on our portfolio today. What we can see is our P&L open is positive, but what's important is not what your open positions are. What's important is how much money you make for the year. So you can see we're still down 200 in DHT. EuroNAV is just about break even, but we've collected $100 in dividends. And NAT, the stock's a little bit weaker today, so it's coming off. But our net position in there for the year is only $32 down for the year, so that's a lot better than being down $150. So we're slowly getting there, and it does help that we sold a naked put in there. So that's going to get us profitable here at some point, we hope. I'm bidding in some of the DHT calls. I'm trying to pick up some cheap calls if the stock comes down. I don't see any rich puts to be selling in there right now, so I'm looking for cheap calls in case we get some kind of pop in here off the back of some unexpected news. So if we go and look at our peers, what I just want to show you real quick is I've created a column here which measures their performance from day one of the captain's log. So this is going to basically tell us how things have performed since the day one, and which is 31 trading days. So what's really interesting here is just day one was one day, it was April 27th. So I bought calls the day before the market peaked, like a lot of other people. But I stayed really small so I wouldn't get hurt too badly. So what we found that since that day, oil futures are up 125%. Since April 27th, Dow Jones futures are up 16%. And since that day, the US dollar has weakened 4%. So the reason why I put the dollar in there is the dollar influences the price of oil and the price of equities. So as the dollar weakens, oil and equities go up because foreign investors are able to buy the shares with less money. So they're willing to pay more. So you do want to keep an eye on the dollar. In terms of performance, since that day, Scorpio's been the worst performer. And then TK and Diamond. What's interesting is the three stocks that have been the worst performers are the ones that don't really pay a dividend. I mean, Scorpio pays a dime, which is nothing. So it's interesting, those that don't pay dividends are the worst performers. And then the other ones that do pay a dividend. Now, I'm not sure about some, like Ardmore. I don't think they pay a dividend. But the other ones do pay a dividend. So that's curious that the non-dividend paying stocks have been the worst performers over the last month. Quite intriguing. It's tempting to think about doing something with like a Scorpio tankers, but we need to do more research on them before we average down using Scorpio. Like I said before, if you want to average down with a different tanker stock, as long as they're down more than your stock and you still feel like they're a well-run business, then I have no problem with that. What I don't like to see is to come in here and go, oh look, EuroNAV is the best performer, I'll buy more there now, because this stock was trading a lot lower before when we bought shares. So I don't want chasing stocks. You just want to take advantage of down days to accumulate more if it's down enough to make a meaningful drop in your average cost, right? So that's the logic around that. You're always trying to do something that brings your average cost down meaningfully. You don't want to just bring it down a nickel. You want to bring it down like $1, as an example. Okay, so that's what's happening with the peers. And so I thought I'd show you a quick chart of each one of these. Do it by worst performers. So right now, for today, right now NAT's down the most for the day. As you can see, it's not a significant drop in there. But this is from April 27th. So we can see we actually dropped 50% from the high in there, and we've had a nice little bounce up. So we're still down 18% from that day. The next one is NNA. What you're going to see across all of these is they're pretty consistent. Scorpio's the biggest one down. It's down about 30%. And again, this one was down 50% as well, approximately. Here's Frontline, which is done really well over the last couple of days. So it was also down, about almost 50%, and we've had a nice bounce back up in there. Diamond Shipping pays no dividends, so they retain all that profits that they make. So you'd like to think that they would perform well. It's interesting how they really haven't done any better, although they don't pay out any dividends. And then here's DHT. I mean, what you can see on here is I've actually started to put some bids in on some cheap calls. I'll let you know once they get filled. They're obviously not at my price right now, so I need the market to do something unexpected to the downside to get filled on those. And then there's TK Tankers, and again, they almost got down 50% right there on March 18th when everything was down. Then there's the Euronav, which is one of the better run companies, and we really didn't see much of a drop in that one because they are profitable. They have positive retained earnings. They would do much better in a downturn if it did show up. Let me just show you the Dow Jones. So this is what the Dow Jones done since that day. So the Dow Jones actually went down a little bit lower, and that was when the tanker stocks kind of started drifting down more. March 18th was really the low in the stocks. This is what the dollar's done. So what's interesting here is you can see that the dollar was going sideways, and then around the 26th of May we really started to see this come down. Now, how did that affect oil? If we look at oil around March 25th, March 26th, I don't know how big an influence that had there, but we clearly have gone from up 100% to 150%. So with a high of 40. So we've seen oil go straight up during this time, so no surprise that tankers are trading lower. So that gives you a sense of what's happening with our portfolio. We're looking to buy cheap calls. I'll let you know if I get filled on any. So there you go. Good luck. On the Q&A section for day 28 of the Captain's Log, Kronholm brought up this issue of the dollar weakening and how foreign investors have been losing on their stocks because of the weak dollar, and how new investors are willing to pay more for oil and stocks because of their stronger dollar. So that's an interesting point. I've added the US dollar index to our peer review watch list because we should keep an eye on the US dollar. It obviously has impacted oil, which is up 125%, and equities that are up 16% since we started tracking the log a month ago. So that's a good point. We should keep an eye on that. And so I've added that in. Thanks for that. I could see where the dollar can be more important. Man and Sam further up both pointed out that using book value for ships is not useful. So I've gone ahead and taken that out of the peer review, and their point is valid. What they're saying is that if you use book value for a ship, which is the purchase price minus depreciation, you can end up in a situation where the cost of the ship is not even close to the price that you could get if you wanted to sell the ship in the open market. So there could be a situation where the net asset value of the business or the ship could actually be negative if they paid too much for the ship, which is very likely to happen in the shipping sector because it's highly volatile in the times that when they buy new ships, or when the business is really good and profits are rolling in. So it's a good point. So we're going to have to figure out how to track the net asset value. I will do a separate piece on that, try to do a relative valuation using NAV. A lot of people made money over the last day. We've had a nice pop in the last 2 days, so that's great to see. And Man pointed out that Scorpio, which is the worst performer in the sector, is actually not an oil tanker. They mostly have product tankers. So it's a little bit different from oil tankers. That's part of the business doesn't do as well when storage is a big issue because refineries can just shut down. And if they shut down the refineries, then they don't need to store the refined products in a ship. So they don't have the same advantage as oil tankers do, because oil, you just have to keep pumping it out and you need to put it somewhere. But if the market's not going to store oil, then maybe there is an opportunity there to average down with the product tanker if it's significantly lower than the oil tankers. So we will take a closer look at that one. And then, yeah, a few people highlighted that they did not know about sanctions being a wild card. And a few people asked about how do we know if anyone is actually doing business with Venezuela and could be blacklisted. Day 12, we actually went through all 23 ships that NAT has, so you can look through that. And then if you want to, you can go to a couple of different websites. If you want to pick out, one person asked about Euronav. And so if you want to, I put a URL link into the comments from yesterday, vesseltracker.com. You can go there and actually find out where different ships are and where they've been. Questions around the big short squeeze that's been going on, not just in tankers, but in a lot of other bankrupt businesses. Yeah, this is very common. It happens all the time. Companies file bankruptcy, all the big guys dump it and get out of it. And then a bunch of short sellers come in because it's going to be worth zero. And then all of a sudden you get a big squeeze. So we've seen some squeezes in a few of them. Nikola Motors is another one which just IPO'd, and the company's really not worth much, and they don't have any product out yet, and the shorts are in shorting it because they know it's not worth $50, and now it's like $100. I think it's $80 on the close today. So you get these moments where you get these short squeezes. The prices are higher. They're not where they should be, but it's just a question of too many people trying to short these stocks. And why does it become a problem is because they get too big. And that's why I keep emphasizing to you, if you don't want to be a big loser in investing, you have to stay small. The people who are shorting these stocks, they're not wrong. The problem is they're too big. And that's why, big can really kill you. Glad to see a lot of people made money over the last 2 days. I think that's just great. There's a few people out there that feel as though I can add value in helping them think through strategies that will make them profitable by the end of the year. Okay, we had one person here who has some calls, bought more stock further down. Now the stock's rallied back up. And they're wondering what to do with those calls that they had previously, which are not worth that much. So the way I think about calls is you buy a call with the money you're prepared to lose, and you don't look back, and you don't second guess, and you don't try to cut your losses on the calls. You bought the calls, anything can happen. You manage your risk at order entry. You should just write off the value of those calls. Now on expiry, if they're in the money, then you want to take your profits. If they're in the money, you don't want to take the stock. Because if your average cost is at 440, you don't average up, you only average down. So if you have 5 calls and it closes at 520 or 550 or $6 or $7, you're going to take your profit. And then of course, if you're up 5 or 10 times on those calls, you're going to take a profit early. My recommendation is whenever you can get 10 times, you take the 10 times, and you'll find over time that that's a really good strategy. That when you look back on your portfolio, like when I look back over 35 years of investing, I can tell you that the times that I took profits at 10 times and it went to 100 times is only a handful. Most of the times when I'm taking 10 times on a position, that is the top most of the time. Stick with what is optimal. Optimal is 10 times. It doesn't mean it can't go higher. I mean, the Delta call I bought recently, I sold that for 8 times and it went to 40 times. That doesn't happen very often. But hey, if you make 8 times, 10 times your money, it goes to 40 times. As long as you're making big money on your investments and as long as your losses are really small, then you'll be profitable at the end of the year and you can retire early. Okay, and that's it. A lot of compliments. I really appreciate the encouragement from everyone. I'm really just doing this to help you guys. I have the experience. I'm happy to share it. I really enjoy helping people, and I really hate to see people lose money to these professionals. So if there's anything I can do to help you as an individual investor keep your money so you can retire early, that would make a world of a difference for me, knowing that I've been able to help you do that. So best of luck. Feedback down below. Think about subscribing if you want to be a part of our journey on learning how to invest in the market. Thanks.